This week, Bitcoin prices plummeted more than 3%.
So 50 basis points looks like it could be back on the table.
History says, you look at 16 cases of where central banks actually tightened interest rates when, in fact, they had to get inflation down. And this is in many countries, not just the US. In every single case, you got a recession.
What is ahead of us? Are you getting a sense of it at all? Or are we just going to kind of 2 steps forward, 3 steps back sort of sense of it in the next couple of months?
We saw lately there was some momentum and some heat there in crypto prices hitting a new record. So, why is it not continuing? Can we say that crypto winter is over, or is more pain waiting ahead in the coming months? In today's video, Gareth Soloway explains the current crypto market's reaction to the Fed's rate hikes and tries to gauge where the market is headed in the near future. He also offers insight into Bitcoin price prediction for the coming months. For more details, stay tuned till the end of the video. Also, be sure to subscribe to my channel for more videos on economy, crypto, and market trends. Let's get into the video now.
I think through the early summer months, my guess is we will retest those October lows. But I think, again, the recession that everyone's talking about will eventually hit. But my guess is likely in the second half. So kind of late summer, fall, maybe into the kind of November, December period. And so I think that the markets are going to be kind of on the kind of the cusp of wondering what's the Fed going to do, right? Because the positive of a recession is the Fed stops hiking and maybe cuts, but the negative of a recession is lower earnings for stocks and maybe a troublesome recession that we can't get out of very easily unless the Fed comes to the rescue. So it's going to be one of those guessing games, I think, over the next 3 to 4 months. And then I do think that ultimately it becomes a very bearish scenario for the overall equity markets and really, to be honest, all risk assets.
Hot inflation data keeps causing the market to go down. The market has already given up some of its gains from the start of the year as investors price in more rate hikes, with rates also staying higher for longer. According to Gareth Soloway, investors should be prepared for a volatile period in the markets over the next few months. While it is possible that the market could rebound, it is more likely than not that we will see further declines. He also expects a U.S. recession to begin later this year. When the Fed lifts its key rate, it typically leads to more expensive mortgages, auto loans, and credit card borrowing. Interest rates on business loans also rise. Tighter credit can then weaken the economy and even cause a recession. And the Fed has never managed to reduce inflation from the high levels it has recently reached without causing a recession. Let's get into the next clip to hear more from Gareth Soloway on the economy and crypto market.
I think we're seeing more and more signals of this where, you're getting certain data points like jobs to stay strong, but then you have other kind of economic data points that are becoming very, very weak. And I think ultimately the jobs will weaken, but it's keeping the Fed tighter for longer. And that's actually going to be very problematic over the next 12 to 18 months. So I think you're going to get in this very serious pickle for this economy. And I think you're going to see a lot of fear coming in later in the year and into 2024. Yeah. This is my caveat to that, is that I do worry we're going to get in a recession that's not going to be a normal recession, right? We've just gone through 13 years, arguably, of an expansionary period with massive printing of money, interest rates essentially near 0%. And so to me, there's almost this scenario where we could now be stuck in a longer recessionary period than what we're normally used to. And again, part of that is the fact that if inflation doesn't come down to 2 or sub 2%, the Fed is not going to be able to lower interest rates back down to where they were for the last big boom in 2021. And so again, the question is, even if they drop, let's say they drop interest rates from 5% back to 3.5%, how does this economy continue to function? And I do worry that we get in this scenario where we're stuck for a multi-year recessionary period. And I've actually gone on record in saying that I wouldn't be surprised if the S&P doesn't make new highs for 5 to 10 years at least, maybe even more.
The U.S. avoiding a recession could actually be horrible for the market. That's because the Fed would likely keep interest rates high in a no-landing scenario, weighing on stocks and risk assets. Already, Fed officials have hiked rates 450 basis points over the last year to tame high inflation. Though most analysts have forecasted interest rates reaching 5% this year, rates could soar to 6.5% if the U.S. avoids a recession, strategists estimated. Talking about the cryptocurrency market, Bitcoin showed some signs of recovery in early 2023, but now it's back in dire straits again. We saw some relief because money came into the market in hopes there will be further interest rate hikes. But with hot inflation and other economic data, rate hikes are not going anywhere. According to Soloway, the crypto winter is far from being over. Let's get into the next clip to see why he believes so. Also, be sure to give a big thumbs up to this video.
So I do think that we're going to see some downside in Bitcoin here, and we've already seen a little bit of a pullback off the 25,000 marker. But let's take a look at the chart and see what we have in store here. So if we look at the chart of Bitcoin, we can see that the recent highs mirror the high pivot from the August period, right? So it makes a lot of sense why that was going to be a pivot resistance point. And so what we can do is we can basically take a trend line, put it right at that high, and it's the highest point going back to when we made the cycle lows on Bitcoin here, and that's where we stopped out. Now, what we're seeing here is actually a little bit of a channel being developed. And again, channels are really handy for kind of giving us highs and lows. So what we can do is we can connect these lows here, and we drag that trend line up, and then we notice that that matches the highs on Bitcoin as well, from here to right here. So what this tells me is that you have a lot of resistance around 25,000, 25,300, but then your technical support is around 22,300. So my guess is we'll retest 22,300. The big question then becomes, do we break that level? I am in the camp that eventually we do break that level and we trade back to about the 18,400 level, which was the midpoint here of this kind of W pattern bottom. So again, I am in the camp that we will see some trouble for the economy here over the next, at least in Bitcoin and the stock market, the next few months. I do think a retest of the October lows, which then brings Bitcoin back to about 18,400.
So the crypto rally that started in January is taking a break again. Bitcoin prices are down 10% in 2 weeks, and Ethereum has lost 8% over the same period. According to Gareth Soloway, the crypto winter is far from getting over, which means there will be more slump in prices. He believes prices could go down further. In this unpredictable market, many investors wonder whether cryptocurrencies will ever return to solid long-term growth. Let's get into the next clip to hear Soloway's thoughts on whether or not Bitcoin can hit that level of support around 23K.
You're getting this consolidation in the charts, and that does seem to be a pivot point. And the reason it's a pivot point is that if we look at the daily chart, and I can throw my chart up again here to take a look, is we clearly see that this area here, that first kind of little topping area, that's right at 23.8. And so the idea here is that if you can recapture that high, it starts to tip the scales towards the more bullish side. Now, again, if we put that trend line in here, right at 23.8, you can see right now we are just below it, but you could be putting in a little consolidation that could be setting up for another move to the upside. So this is kind of one of those scenarios where as a trader, I sit back and I watch because I'm not good enough to kind of determine which direction it's going to go, but it will be interesting. And I agree that if we get back above 23.8 and it can stay there, let's say for 24 hours, it then increases the probability of us making a move up again and retesting the 25,000 level. Now, if we can't get above 23.8, it goes to the scenario that I just talked about prior, which is where you have to start looking at this 22,300 area on the chart.
This is a time to be cautious with your investments and watch the market closely. Do you believe we are going to see some downside in Bitcoin? Can Bitcoin prices fall back below 20K? Let me know your thoughts in the comments section below. For more videos on economy, crypto, and market trends, be sure to subscribe to my channel. You can also hit that bell icon to never miss any video. Also, don't forget to like and share. I'll see you guys in my next video. Adios, and thanks for watching.